Q2 numbers up 34%. What did you make of the report card?
I think so far so good. I think it was a very solid quarter. As you said, the bottom line was a beat, over 30% growth in earnings, and that beat certainly our estimates and consensus. I think the top line was maybe a little bit weaker than we expected, 7% growth, which was below the sort of 10% that we were looking for. And what we've seen is certainly some pricing pressure in China, ASPs are down, and that offset the very strong, volume growth. But overall, I think very good cost control from the company. Margins, were very strong, sequentially higher, with gross margins up around 25%, operating margins at 15%. So overall, I thought a very solid quarter.
You're talking about cost controls as well as margins. How is the price war that is, really entrenched in the EV market in China right now? How is it impacting CATL on its margins? And then now this anti-involution campaign being brought on by the authorities.
Well, that's right. I mean, what we've seen in China is actually still very strong, EV demand growth, but the pricing war that's taking place between the EV makers is really, putting pressure on prices. And, what we've seen is, if you look at the ASPs for the second quarter, they've dropped, 12, 13% from, where we were a year ago. Part of that's down to lower commodity prices, but it's also down to just more intense price competition amongst, companies in the EV value chain as a result of, price cuts from OEMs. So, that's definitely, hitting the top line. But, if you look at kind of the measures that CATL have put in place, which is, reducing, costs, maximizing, operating utilization, they've been able to actually show, very good cost performance to offset some of those pricing pressures. And margins have actually been, very good, I would say, for the quarter.
How is CATL impacted by the trade war by President Trump? Of course, it's the critical minerals that China has lots of that is very easily accessible by the likes of CATL. But in what ways is it impacted by the trade war?
Yeah, I think it's really had quite a significant impact on battery exports from CATL, to the US. We've seen a significant decline in battery exports as a result of the much higher tariffs. And a lot of Chinese battery exports are now being rediverted, into Europe. So we're actually seeing more exports going to Europe and a lot less going, into the US. And I think that certainly hit, the ESS business for CATL. I think ESS customers, energy storage customers in the US were, a big part of the growth story in the early part of the year for CATL. And we've certainly seen, a bit of a slowdown, certainly in overseas sales to, ESS customers in the US. So I think that part of the market, is pretty challenged. I think the good news, if there is anything in this, is that, the EV market in the US is still, pretty anemic. China's leading the way on growth. We're seeing a big pickup in growth in Europe. So even though they're effectively being shut out of the US market through very high tariffs, growth in the US is pretty anemic right now. And so I don't think they're losing out in a significant way right now. But over time, if that growth comes back, then I think that certainly is a risk for CATL.
CATL services customers like Tesla, Volkswagen, BMW, and Geely. But just yesterday, we had heard about this new deal, Tesla inking a battery deal with LG Energy worth $4.3 billion. Contemporary Amperex shares taking a hit. Do you think that has anything to do with the trade war and maybe moving away from some Chinese companies or the exposure for Tesla?
Yeah, I think the price decline yesterday signaled a bit of profit taking ahead of the results, which I think everyone expected would be very positive. But certainly the announcement that Tesla were going to be using LGS batteries, is certainly an issue for CATL. Tesla's a big customer for CATL. And what's significant about the announcement from Tesla is that they will be using LFP batteries from LGS. And if you remember, CATL, China really have been leading the way on LFP. This is an area where the Korean battery makers have really missed a trick, and they're playing catch up in the LFP market. And I think what's significant is that you're seeing this pivoting from Korean battery makers into LFP, and the fact that Tesla, one of the most consequential OEMs, is now signing a deal with a Korean company for the supply of LFP batteries, is a risk certainly to CATL. If we look at Europe, on the other hand, what we're seeing is CATL actually gaining share, from the likes of BMW, VW, relative to the Korean companies, LGS, Samsung, SDI. So, what Tesla's doing is certainly more of a negative for CATL. But if we look at the trends in Europe, they're actually more positive for the company. We're seeing the big European OEMs actually increase their exposure to CATL, which I think is still by far, the best company, in the world in terms of LFP, battery technology.